Welcome back for another top-notch video. This week, guys, we're going to be talking about the 17th of September through the 21st of September, our third week in September. As always, we are a channel that goes over retirement accounts. So if you have money in a Roth IRA, brokerage account, or the TSP, we usually go over these funds. As always, the TSP folks, we talk about the CSI and F funds. For brokerage folks, we talk about ETFs that you can be in, which would be IVV, VXF, EFA, and AGG. This represents the S&P 500, the Dow or small caps, the international markets, and bonds. So what we always do is we go over a general overview of markets, then we kind of go more specific, then we show you where our allocations are for the month. So let's get right into it. So for this month, we take these charts from TSP Talk. A guy named Tom does their commentary there. Just has some good charts that he throws up. As you can see, stockcharts.com is where we get them from. So for the S&P 500 this month, you can see that we did get into new highs. We are still in our trading channel, so that's good things. We just see some cause for concern on some of the other charts we'll show you later on. But in our broad overview, things do tend to look good. Just keep in mind that usually when we get a breakout on highs, we seem to have just kind of a breakdown right after that. We've seen that 1, 2, 3 times. We could possibly see it again. So just keep that in mind. But we are still in our trading channel. Nothing abnormal here until we could even see higher highs next week. But my thing is when we get into the other charts, just the price percentage oscillator and whatnot in regards to the S&P 500 or the C fund. Moving on to the S fund, we're just seeing some consolidation here. Kind of seeing really kind of a weird, like I would say, microphone type pattern here with the S fund or VXF small caps. Where do I think it's headed? I'm not really sure. We have a support line in here, so we'll have to see where that goes from here. But it's just another interesting case, which I'll show later on. Kind of a lack of direction. We kind of saw this back here, and then we saw some consolidation, and then it grew. So we'll have to see where this goes from here. I wouldn't be surprised though if we hit our 50-day moving average. That's kind of what I've been looking forward to, and I think it might hit that when it hits that support line. To be seen. Then we'll move into bonds, AGG. The F fund, it is below its support line, below its 50-day moving average, and continuing down. So just keep that in mind. And finally with EFA, one really good thing with EFA, obviously we saw a really great week with EFA. As the dollar rallies, EFA tends to go down. We did see a head and shoulders pattern from the dollar and a breakdown of that. So could we possibly see EFA leave its bear market? I think we have good reason for that. We see some good things in the charts for that. So we'll just have to wait and see. And then finally, just keep in mind that overall the month of September is typically a down month. We're in our period now of usually negative returns. So we did see a negative return out of the S fund this last week. Could see maybe one more week of that before we head back into our positive returns. That being said, let's look at the weeks that we had. So on our charts again from TSP Talk, we did have a positive week for the C fund and for the I fund. Obviously, the I fund gaining almost 3% in a week, which is pretty impressive. Really rocketed it up there. We typically hang out in the C and S fund. As you can see, the S fund did lose 0.5% for the week, and we are down a full percent. Usually we jump in right around a full percent. I still think we have reason until we get our 2-day charts back before we jump back into these charts. Now, I could be wrong, but I'm willing to wait out just a little bit more with us having around a 12% return rate for the year and being ahead of all funds for the year. That I'm willing to wait this out just a little bit. Now, I might jump in Monday or Tuesday, but I said that last week and the week before, but we'll have to wait and see. And like I mentioned, the C fund is starting to catch the S fund. They are in the same percentage rate. As always, the F fund and the I fund are still not positive for the year, but we are sitting right around 12.38% for our channel top notch. So we are beating all funds for the TSP for this year and for our accounts. So we're pretty proud of that. Moving into the 9th month of the year, we are above these averages. We'd like to stay above them. So look for this next week for some possible movement back into equity funds. If you don't like looking at it on a chart perspective, you can always look at it from this perspective. I really think this is a good perspective too of our TSP returns for the year, or if you're in those brokerage accounts, just keep in mind, VXF and IVV and, EFA, AGG. So as you can see for the calendar month, if you don't like looking at percentages, this is pulled from the TSP Center for the TSP returns. Keep in mind, like I mentioned, just watch your funds if you're in brokerage accounts. But as you can see, if we started out 0% for the very beginning half of September, we saw that we pulled our stuff into the G fund, and for the most part, all the way to the majority of the month, we had pretty much till the 17th, we saw pretty much negative returns for all our funds. And then towards this last week, we did finally see positive returns for the C and the I fund. The I fund really coming out from those negative returns, so quite a fantastic turnaround. But we have a word for caution for this month. We'll show you those as we dive more deep into some of our other charts. So here is IVV, or the C fund. As you can see, new highs. We did break this trend line on the top here, but we're seeing a new trend line here, and it's at the very, very top of that trend line. We're seeing some resistance. We have not broke above our 20-day moving average in a very long time, all the way since the back of July, and we'd have to see it at some point come down to this bottom of the line. Why do we think we could see that possibly? Well, if we look at IVV on our weekly charts for some of our DO oscillators and price percentage oscillators, here you can see we are starting to lose energy here. We don't like to see this when we're at the typical top chart, the top of the chart here. So we are seeing lost energy in our bars. As you can see, we're at a 360 here on our oscillator, and then we move down to a 353. Now we did see a turnaround on the 2-day chart, which is great. That is a very positive sign. We've been waiting for that since the beginning of September. Obviously, we have not jumped in since we saw this negative activity here. So we have been waiting for that, and that is a confirmed bar. The only thing I would wait for is our other indices to maybe jump in with that, and I have not seen that from the S fund or the VXF fund. Moving right into that fund, as you can see, we did break our trend line here with VXF or the S fund, and we have not been able to get above that yet. We've kind of been struggling, sitting around that 50 or the 20-day moving average, possibly seeing it move down to the 50-day moving average. We could definitely see that. And moving to our charts, we see sort of the same thing on a weekly chart. As you can see, we're sitting about even, a lot of indecision here, 150, 150, and then a 155, which was a positive sign. We did not jump in off of that. We were waiting for this week, and this week we had a huge downturn. So much we went from a 155 to a 112 in our DO oscillator for the most part. And as you can see with our price, a lot of indecision, a lot of just not a lot of price movement. So we are waiting on that. And the only other thing for our key to move back into equities, I think, is going to be our 2-day bar. So as you can see, like we showed you on that other chart, we have not gained any money or any return for the S fund or VXF for this month. It has been down, even though the Dow did hit new highs this month. We could possibly see, I don't know where we're going to see this go. I really need to see some 2-day action or some upward movement on our 2-day charts for us to get back into this fund. And we could most likely see that. Please keep in mind we have indecision here whenever we have a top and bottom, high top and bottom with our strings. So we have a top and bottom here, just a top here. So a lot of indecision of people not knowing what to do with this month. And we need just some clear direction on what to do with VXF, which has been the best performing fund this year so far with our TSP account. That being said, let's get into the next fund. So EFA, quite an incredible month. We saw it bounce off this line like we did in August. Towards the end of August, we did jump in on that a little bit just because the funds were not doing that well. We did not do that for September. Based off the chart that we had a bad weekly chart, and we just decided to wait that out. We did see a higher high here, so that's very, very positive. I would like to see it break this line here before we start to get involved with that, so we are getting close to that. We do have some gaps in here, so I would expect those to either come down and bounce off this line and get filled, or a complete breakdown like we saw the last time and the time before that. On a chart perspective, it is looking very, very good. So this is our weekly chart percentage. As you can see, we did cross that line with the blue and the red line, which is excellent. We have not seen that since back in May. And before that, we have not seen that since back in January. So it has been a very long time since we have seen EFA cross that. And another really good sign with this EFA or international markets is the dollar is on that head and shoulder pattern like I showed you guys. So here's that head and shoulder pattern and then that breakdown here. So we can see very good things out of EFA to come. I would like about one more week of confirmation before we really start considering getting into this fund. And luckily we have our funds in a G fund, so we do have the ability to make moves still this month. So waiting just for a little more confirmation before we get into EFA, but definitely looking like one of the best funds so far if it doesn't crash like it did on the last time, as we saw here. So usually we see about 3 up bars before we see a crash in a bear market. We have 2 of those up bars, waiting for next week about Wednesday before we really finally make a decision on EFA. And finally, let's look at bonds. With bonds have just been awful. As we have said all year, guys, we have not been interested in bonds, not been interested in AGG, not been interested in the F fund. Continues to underperform, continues to decrease, and again this week we just have seen an awful September. It broke its trend line here, and just something you don't want to be involved in. If you are in the life cycle funds, keep in mind you are in bonds. On a weekly chart, this did cross, so that is really bad. 3 really nasty weeks. And on a 2-day chart, we still don't even have it there. Honestly, a little bit of good movement here, but I would just stay out of AGG at this time. Stick with your equity funds that have been doing well all year. That CNS fund or IVV and VXF, Dow Jones, small caps and large caps. The last piece I kind of want to go over is just some news pieces. I know some people get kind of concerned with the news and sell on the news and whatnot. I just want to show you guys something with the trade wars. So there's been a lot of talk in the news about trade wars and doing trade wars and all of that. That being said, I want you guys to know that in the news it seems like we are losing these trade wars, or we're not doing very well with these trade wars. But if you look at the general markets, the S&P 500, the major markets in China, Asia, the UK and Germany. I know this chart is kind of hard to see. If we got it all the way from the beginning of the year, we kind of saw them all take off sort of together, and then we all took that 10% basically correction, and we've been in that corrective territory. The chart that really comes out on top for getting out of that corrective territory has been only the United States, being around a 10% return for the S&P 500 so far this year to date. Whereas other markets such as China, as you can see, is at a negative 10% return rate. That is a 20% difference, guys. So the news can say whatever they want, but if you look to the facts, you can actually see that probably the USA is winning this trade war in what it has. And as you can see, here is our charts all the way from January, and we have our strongest markets versus our weakest markets. So the USA, UK, Germany, Asia, and China. So as you can see, almost the only one that is in the positive is the United States. So staying in those equity funds for the United States is good. And yes, we are currently in the G fund right now, guys, but keep in mind that just because we're in the G fund, long-term charts do look really good. As you can see from 1999, I know I bring these up time to time. These are all our moving averages, all from basically the 100-day moving average all the way out to the 295th day moving average. So way out there. As you can see, our big red flags are when moving averages start to roll over, like we saw in 2000 and 2007 and 8 with those respective crashes. How does 2018 look? Well, with 2018, we put up price here. So as you can see, these are from Shivako Capital Channel, by the way. As you can see, we saw our price correction in here. We were in our moving averages for a long time. Our moving average started to not have that rainbow look effect, and then as charts took off towards the mid of this year, we corrected those averages and we are back to what we saw before, which is a very good sign for charts on a long-term basis. Looking at our funds, where are we at for this week? For the entire month of September, we have been in the G fund. Because of that, we are still the top fund out of the TSP funds. All TSP funds are right around 11%. We are at 12%. So we are the top dog. We are outperforming all funds, which is great. I'm a little concerned that these funds could really catch up quickly. So look for a move possibly next week into the equities again for the most part, or maybe even into the I fund. New allocations are going into the VXF, so keep that in mind as well. But for the most part, we have been in the G fund. I thought we were going to make a move 2 weeks ago. We didn't see it. 1 week ago, we didn't see it. This last week, we did not see it. So hopefully we'll see it this week and get back into those equity funds, because charts on a long-term basis do look very good. And we do not. The last thing we want is to lose out on any gains that the markets have that we can take advantage of. That being said, if you guys have any questions, go ahead and write them in the comments below. Please like, share, or subscribe to the channel. We appreciate you guys, and that's another top-notch video. We'll see you guys next time.